And that sound means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report here at Tackle Trading, where the coaches get together, talk about the markets, break down the price action, give you guys the news, give you guys some interpretation of the news as well, kind of give you the idea of what's actually happening out there, earnings roundup, you name it. And today we're also going to play Queen's Court because we got Coach Emily Mururi from the Dynasty Investors, as she always shows up here on Tuesdays to join us here again today. And welcome out. I am your host, Coach Tim Justice. I got Coach Matt here running screens. Let's get right down to business. Couple things I want to do today. Home Depot earnings, Walmart earnings. We're going to do a quick market analysis because there's some interesting technical setups developing right now, specifically in some of the sectors. I really like what I'm seeing in technology and industrials, potential breakouts there. We'll get the input from the coaches as well. Got a couple things to promote here at Tackle Trading, but we'll get to that shortly after pleasantries. First, you, Coach Matt, how you doing today on a Tuesday?
Doing absolutely fantastic. Excited to be here for another edition of Queen's Court, and excited to hang out with you in the halftime report.
With the crew as well, halftime crew out there, hashtag Team Tackle in the chat as you're coming on in here. It's always a great way to start the conversation. Emily, how are you doing today on a Tuesday?
I am doing great on a Tuesday. It's nice and sunny here in Washington, D.C., so I have no complaints.
I showed up to get my head chopped off and have you float me, and now I understand we're not even going to do that today. So you're in a loving mood. You just want to have a nice coffee and a coffee cake.
Somehow
tea and crumpets with the Queen.
No, somehow you're going to bring it back. I'm going to chop your head off. Somehow you will do that. You will manage to do that. And Matt will have to go get his sword and execute you.
Executioner will show up randomly.
You want me to send you my sword?
No, the Queen doesn't get her hands dirty.
He'll do it on his own. No, it's no worry.
Oh, too much fun. All right. If I deserve it, I deserve it. It is what it is. A couple things that I want to do before we get started here, Matt, and then we'll get right down to analysis. Number one, on Mondays, every Monday, we drop a podcast for Trading Justice, which we've been doing now for 7 years, actually, 451 episodes. And this one was a great one. Sat down with the great Coach Tyler Craig, from Trading Labs and Tackle Trading. He'll be here tomorrow for the halftime show. Everybody out there who's Team Tackle knows Tyler very, very well. And had a good conversation about the power of compounding and the lessons we can learn from the great Warren Buffett regarding compounding. And, in reference to his newsletter that he wrote here recently, Matt, I love all of the podcasts. Whenever I get a chance to talk to coaches, though, that's maybe my favorite, right? We get a chance to get their insight and their wisdom on different topics. Talk a little bit about the podcast and this important topic, by the way, which I know that you teach a lot on how compounding can really change the way people think about their money, their long-term wealth creation, and their investing.
Yeah, I mean, compounding being the eighth wonder of the world, according to Albert Einstein, and Warren Buffett is the king, queen, and country when it comes to compounding gains. And it's amazing. Everybody wants to go get that growth. And I'm certain in Queen's Court, we're going to talk a little bit about theta v delta here. And there's times for delta. There are times for delta, and there's time to take directional risk. But there's always a time for theta, making time work for you. And it's amazing what a small amount of cash flow can do on a long-term viewpoint. It's amazing what you can do. Think about it just for example. What could 2% a month do for people? Just 2% extra income a month do for people? It could help pay a little bit of bills. It could help get out of maybe a tiny bit of debt. It can alleviate the pain to a certain extent. What can it do over a 10-year time frame compounded back into the market and growing off itself? It can be life-changing. And that's an amazing concept. And it's one of the reasons why people don't get to where they want to go. They never have the time. They never get that time. Well, compounding allows that to occur. It's such an important concept to understand and to do. I will say it's easier to understand than to do constantly. You got to make it part of who you are, your investment, your goals, your monthly routine, all that jazz. But Tyler Craig does a wonderful job of coming on the podcast yesterday and discussing that. And then obviously, as always, you can go check out the absolutely beautifully written newsletter written by the same amazing Tyler Craig on compounding gains and what it means. So double whammy here today from the Trading Justice podcast crew. You get the podcast on compounding. Definitely check that out. But you also get the Trading Justice newsletter on compounding, which I dare say, is one of the better written newsletters in the market today. Tyler and all the other coaches who write for Trading Justice do a wonderful job. So definitely check both of those out this week.
Absolutely. And Matt, if you'll be so kind as just scroll down that newsletter for a couple of seconds here and all the way to the bottom, there's a tool over at Tackle Trading, that Tyler does link to, and you can find it at tackletrading.com as well. But if you head to the newsletter, you can get the source to that tool right there, and it should take you to the trade center over at Tackle Trading. And this is one of my favorite things. It's a compounding gains calculator, and you can put some inputs in there, like $10,000 starting point, rate of return a month, like you said, 2%, and start to map out what those potential things can do. And instead of having a linear, expectation return, you said, 10 years, why don't you give it, 72 months? Sure.
Why don't you give it the car? Like everybody here has went out and got a car loan, correct? 5,
absolutely.
6, 7 years. Everybody has done that.
Yep.
All of us have done that. Well, what instead can that do for us? Well, that can work for us. That's what you're seeing. Look at the growth occur. And again, this is just, it's really, really fun to kind of play around with the compounded gains calculator. Definitely check it out. But for the most part, understand what it is about. And that's what the newsletter and the podcast were about yesterday.
100%. Take a listen. If you're not a subscriber to Trading Justice, while you download the podcast, make sure you click subscribe on your favorite podcast apps. I love the conversation. I love our podcast. I think you guys are going to love it as well. All right, let's get down to business here. Obviously, we're starting the week in an interesting note. There's not a lot of news going on this week. Got a couple of news items today we'll cover. Obviously, Home Depot, Walmart earnings, Matt, but the technicals are holding up very nicely. Doji Monday into a Tuesday that looks like we're pressing for a breakout here. What are you seeing in the chart?
Yeah, yesterday I had Mark here on the halftime report, and we were breaking down the technicals. And as always, Mark's looking at a little bit of dip analysis, and as always, I'm looking at a little bit of a breakout potential here. But the breakout looks legitimate, and we haven't broken out necessarily yet. We haven't yet confirmed the breakout, and the close today is going to be a little bit more important than normal closes. But I said yesterday, in a week where we don't have a lot of news coming into the market, it can be a week where technically you rely on your technical analysis a little bit more than maybe say in times where you have a dearth of economic and earnings reports and geopolitical news, and there might be other things driving the market. I like technical weeks because I have a tendency to find they're fairly consistent. Now let's see as we navigate this breakout. Now, where is the breakout channel in the S&P 500? I'm gonna go ahead and just say 4,700. Obviously, our community knows zones, right? You say 4,700, you just got to label it a number. You understand that it is a zone around that number, and we'd like to see that zone get violated. And that zone certainly does take into account the wicks, and that's why I bring up the zone. It's not the cleanest 4,700 breakout. You do have a little bit of wick nonsense over here to the left of the chart. That's certainly within that zone of resistance, though. Whenever you talk about resistance or support, and again, it's not a finite number, it's a zone around that number. I like to think, and there's different metrics, and everybody's going to be a little bit different here. I like to look at the wicks. The wicks kind of tell me where that top end of that zone is. I'm looking at the top end of that zone being 47.11, and so I like the breakout against 4,700 here, but ultimately I think you got to call it confirmation above the wicks, which would most likely get you above the zone of resistance, and that's 4,711. Regardless of how you want to nickel and dime the level, the breakout looks legitimate here, and it looks like we're in the beginnings of another leg in the market. I don't expect anything like we just went through. That was a pretty beautiful sight to behold, but it does look like something punches up here, and 4,800 doesn't seem like out of the realm of possibility.
Seems like a healthy market condition underneath it as well. I mean, I'm seeing a good strength out of some of the sectors pushing for some of those breakouts. Industrials, tech are two that are highlighted for me.
Well,
do you want to take a look at the other indexes
very
as well?
Quickly, when you're looking at the NASDAQ, confirms its bull flag-based pattern coming into the rising 9. You definitely are going to be looking at a little bit of tech a little bit more closely with confirmation. Dow Jones was interesting here today. Obviously, you got Home Depot and Walmart that are down components. Home Depot up, Walmart down, fairly healthy. But when you're looking at the Dow Jones, it's actually picking up some steam here intraday. You got to like that, especially in the face of a little bit of a sell-off that is occurring in Walmart here, and the Dow's just punching up in the face of that sell-off. I think you got to be fairly impressed with the Dow's response in the face of Walmart's. I'll just put it like this. I think the market's got it wrong on Walmart. I thought Walmart had a fairly decent earnings season. I felt the numbers came in okay. We'll talk about it here in just a moment. But this feels like a somebody said something wrong type scenario, because the raw numbers were actually really healthy.
Yeah, Doug McMillan, when he started talking on the conference call, we had a price response. We'll talk a little bit about
said
what
the
he
quiet
said.
part out loud, didn't he?
Did. You don't say it this season. You don't say margin contraction. You don't say inflation. You don't say supply chain issues. All those things lead to investors wanting to take profit in the short term. I think the market got this one wrong too.
All you got to say is we're going to overcome whatever challenging environments happen in the future. That's all you got to say. You're Walmart. You just cashed in $140 billion. Say whatever you want.
Oh, gross. I just thought of Jerome Powell. All right, I'm moving on. I mean, you can't just say all the fluffy stuff and make everything seem like a great rosy future when there are realities in front of us. I don't know. You're going to trigger me right now. I'm moving on. Emily, let's bring you in here real quickly. Obviously, we're mid-November, Emily. Coach Matt, I asked him yesterday on the podcast, how would he grade the earnings season? And he said, raw numbers, probably a B with the price response and market hit an all-time high. I'm going to give it an A. We've had a wonderful earnings season. We're through most of it. We're pushing towards the holiday season and markets are very healthy. How do you approach conditions like this, Coach M?
My approach all year long, with the exception of that little volatility we had in September and October, has been the same. It's just cash flow, cash flow, cash flow. And when you get these opportunities, especially with the market hitting all-time highs, you still want to continue with what your core business strategy is, no matter what the conditions are, but you still look for those opportunities where you can go a little bit directional, which is what we'll talk about on Queen's Court today. But as far as the markets, it's just been business as usual, just doing those cash flow strategies, and every now and then find a nice directional pick to play, but sticking to your core style of trading, you should be all right.
I agree. Let's flash through the rest of the markets here, Matt, if we can. One quick peek at the rut. Obviously a little hesitation there today relative to the other ones, but it had a nice breakout recently. I just see a nice little flaggy pattern developing. What are you seeing here in the rut?
Mark asked me a question yesterday, Tim. I'm going to stay on this. If the market fails that support, where's that dip that you're looking at? And I do think it's a little difficult in the S&P, and I think it would be very difficult in the NASDAQ, given the fact that we now have confirmation against pivot. But in the Russell 2000, I think any dip here that does violate short-term support levels, and you got to look at the 9 EMA as a short-term support level, and you're most likely looking right there at about 2,380 as well. Any violation there, you got to like the backstop of the rising 20-day moving average right in that upper end of that major resistance zone at 2350, and then anything down to 2300 has to be looked at. And the difference is the strength of this breakout versus what is occurring in the S&P and the Dow and to a very healthy extent the NASDAQ. Those are momentum type trends that have been continuation analysis for better part of the entire pandemic. Here in the Russell 2000, it's like Tyler says, the longer the base, the higher in the space. Well, this has had a 10-month base. It just broke out of. I think we can give the short-term support levels a little bit more flexibility in violating them than on something like the NASDAQ, because when you're looking at the NASDAQ, if that violates this short-term support level, you're at that point violating a pivot here against a momentum trend. I don't see that rising 20 the same way I do on the Russell 2000. And so I think the Russell 2000, you give a little bit more leeway to the downside in the buy the dip mechanics. But anything here on the NASDAQ or the S&P violations got to be met with hesitation.
Yeah, I think so as well. Obviously, I mean, different price action responses in that.
Hey, we're not close there, right? We're not close there. We just confirmed, and now you're 3 days into the previous pivot. You're looking at this as a continuation breakout, and you really like it. I just wanted to clarify what I said yesterday.
Absolutely. Gotcha. And by the way, Coach Mark always wants a deep dip. That's the question that's on his brain every day.
If there's anybody that I've ever met that wants a dip more than Mark, I have yet to meet that individual.
he wakes up wanting to see the market down so he can buy things cheaper. It's the nature of the way he approaches markets. By the way, he's a successful investor, so he's got his own style.
Why he's really, really good at what he does because he's very consistent at what he does. Market's breaking out of all-time high. He's complaining. If the market breaks out of an all-time high next year, he's going to complain at that too.
Well, he can
very consistent.
He can tweet Michael Burry. They can complain together when things
oh
are
man, I feel no sorry for Michael Burry today.
No, he's a billionaire. He's had plenty of success.
Shorted the number one momentum trend in the history of the market. What are we doing?
What are we doing here? Flash your commodities for me real quick if we can here, Matt. And I do want to ask you a question on the dollar. Not a long conversation, just a quick one. But give me a look at crude oil, which is in the range. You've got me some levels here that I'm watching. I drew them on my chart, 80 to 85. Obviously, we're just kind of sitting on support there. Yeah. Anything you want to highlight there on crude?
Hey, Team Tackle, what am I going to say about crude oil today?
Nothing, Burger.
I'm willing to bet they understand. I don't care. Everybody repeat after me. I do not care what happens between 80 and 85.
I do not care.
I do not care if it goes down to 78.
Can we do this?
Care about, I tried to do green eggs and ham. Like I tried to do that about, I don't care about 80 and 85, but I couldn't finish it after that. I do care about a breakout. That's the only thing I care about. Oil can go neutral longer than you could ever imagine. I don't care if it's a week or two or three or 3 months. The breakout is legitimate here. Dip mechanics are completely gone. Any violation is going to be met with concern. You're looking at 85 break, and that's the only thing we're looking at.
You just gave me a nostalgic thought about row your boat. Maybe we can do the I do not care.
Wait, I do not care. No.
I do not care.
It's got to be green eggs and ham. It's got to be
green eggs and ham. Green eggs and ham. 80 to 85 are the levels that we're going to be watching there. Obviously, and by the way, I think it's very, very helpful, very important.
I might not be able to get off green eggs and ham for the rest of the day. I do not care about 80. I do not care about 85. There's got to be a conclusion to this.
Oh,
Team Tackle, help me out here.
Well, here's the conclusion. When it does break, you'll know, which is the beauty of technical analysis. It will tell you when the green eggs and ham story is over. Move into gold next, if we can. Beautiful breakout here recently, Matt. Conversation we've been having here for a while is gold is running and the dollar is running. Which one's going to give? Gold is kind of given here today at a pivot high, kind of given a little bit back on one day. What are you seeing here in gold?
The world is becoming more aligned. That's what I see here on gold. For the first time in literally a week and a half, you finally have gold versus the dollar behaving historically the way it usually does. Retail sales data came out today, positive number on retail sales. In fact, I want to give you the number. It came in at 1.7 versus the expectation of 1.4. Typically, positive economic reports will have a positive impact on the currency. Well, when you're looking at that said currency, if you go look at the US dollar versus the euro, for example, if I can get my thing to actually type appropriately, EUR versus USD, let's go down to an intraday chart here. You see retail sales come out here, euro down. What does that mean for the dollar? That means for the dollar going up. Once again, let's make sure we can work that. UUP here, see the dollar going up. Now let's go to the daily time frames. Dollar up. Last 2 days, positive economic activity. Dollar going up. What are you seeing on gold? Positive economic activity. Gold coming back down. The beginnings of the one of them has to come back down analysis. And rightly so, it is gold. Gold needs to test those lows, and so I actually really like the development on the pattern that's happening on gold. You're starting to see these behave a little bit more rationally, I would say. Gold has a pivot high point right now at about 1880. I would like that to come back down and test these new support levels. We've talked about 1840. We've talked about 1835 for a very long time. I like the pullback potential on gold. I'm not a believer in the dollar movement, by the way. I think this is one of those moments where Europe's just a little bit more trash than the U.S. is from a currency economic perspective. And so this to me is more about what is happening negative around the world than it is a positive in the United States. these things have a tendency to work themselves out over time. I do like the backdrop of the gold movement. I like the technical momentum that we have seen. I like the consistency there. And if that dip does come down into that 1835 to 1840 level, and we get a nice slowing momentum candle followed by an upward movement in price, I think at that point you're extremely interested in what is happening in the gold market. Outside of that hypothetical technical pattern, something we've been talking about routinely over the course of the last couple months has been the improving behavior of GDX. And as gold stabilizes towards the low points, well, that allows these gold miners to be a little bit more profitable. And, we've mentioned the oil argument, right? As oil starts going up, what happened to those energy companies? They start going up because they start making more money. Same concept here in the gold market. As gold starts stabilizing at higher levels of support on those longer time frames, and that month to month, quarter to quarter price of gold starts going up, it helps those mining companies out. Same thing happens in the crypto market as well. And so, it's just one of those things that an improving environment overall gives you more confidence in the mining components of that space. And so I still think you got to like GDX forming a little bit of high base type pattern where you're really clean right there at the 35 handle. That is something to keep an eye on as a continuation as gold starts to navigate this choppy and yes, fairly volatile. But at this point, oh my goodness, my keyboard is all over the port today. But at this point, overextend is starting to do a little bit of a pullback, starting to behave a little bit more consistently with the dollar analysis. And as long as the dollar and gold behave rationally and that's just my opinion, rational, so it's subjective, I think the analysis in gold does get a little easier.
Mm-hmm. Mm-hmm. Yeah, and I love the GDX chart, and I own GDX, and I'm going to look for cash flow opportunities on the raw equity position. I'll probably own that for a very, very, very long time.
GDX is an instrument a lot of people own forever. Yeah, it's an investment instrument.
I'm thinking about picking up some XME as well because of just the strength in metals in general. XME's got an interesting little developing chart, but it might
like the breakout here. Though.
Yeah, I was just going to ask you the same question because I'm looking at this little hesitation. And I'm like, do I want to wait for the breakout? I haven't made a decision yet, but I probably will wait for that breakout.
Well, I think you can front run. I do think there's some front running ability here. And, front running to me is, and I did a video over there for the step system in our Discord on front running a few weeks ago. Mm-hmm. But when you're looking at front running, it's really about identifying major levels of breakout potential.
Sure.
Because again, let's go back to what Tyler always says. The longer the base, the higher in space. Those are major breakout zones. And I do think you got one right around the 48 handle on XME. You're dealing with a little bit of pullback though here. And so I do like the ability to front run if you got a clear short-term trend going into a major breakout with some degree of retracement in front of the breakout. If it's high base, wait for the breakout all the time. High base, wait for the breakout. But if Coach Frank were here, Coach Frank would say, yes, you can do that as long as you got a legitimate 1-to-1 reward to risk ratio at target number one, which would absolutely have to be 47.85. And so as long as you could structure a trade to where the stop loss, say underneath a 20-day moving average, entry above the high of today, targeting 47.85, as long as that's 1-to-1, you can legitimately front run. I would have to break it down and detail it, but yeah, most likely wait for the breakout. But this is something that could rock and roll above 47.85. So at a minimum, put it on a radar.
I definitely think it's got to be on a radar, no doubt about it. Emily, I want to get you in here for the gold analysis real quick, because I know as a dynasty investor, as the coach of the trading lab there, you do look at metals the way that we look at metals. You think about them long term, but you look at cash flow. How are you approaching these metals markets as they've been improving the last couple of weeks?
Well, I was looking today at my portfolio, kind of going, where do I need exposure to? And we'll talk about that on Queen's Court. But I heard front front running, and I looked at that EME chart, and I might just have to
XME.
XME, and I might have to remove my funds where they were allocated to go to somewhere else and go to XME on that.
Grabbed your attention, did it?
Matt said the words I love to hear: front running, because I like to click those buttons, and if I can click them a little bit earlier, I can still make some money. I will. So
all of a sudden, Emily's selling a naked put at the money, buying
awake.
out of money call options, and yelling YOLO as she runs down the street.
Who knew? All you had to do is say front run.
Me. You just had to say front run, and I'm awake. I'm so alert right now.
YOLO, let's go.
Did I hear front run? Okay, let's go. That's
poor boys trade. Let's go.
Let's go. But yeah, the metals market has been a long-term investment for me. I love trading silver. I love trading gold, investing in those as well. So yeah, they're good areas to be in.
Gotcha.
All the time.
I think so. Everybody should have those things on their radar. If you don't have XME, make sure you put it at least on a watch list there. All right, let's move into Bitcoin from one area of the market that there might be some opportunity to front run into one where I don't think you want to front run here, Matt. I think you got to have improved technicals. That chart kind of blows up short-term analysis, in my opinion, with this candle today. I read far too many stories that were inaccurately trying to figure out why Bitcoin was selling. It's selling because the technicals broke down. Let's not overthink it. The intraday broke down here between yesterday and today. Maddie, what is your read here on Bitcoin and that chart?
I really did appreciate, in a comedic fashion, the articles I was reading today on why Bitcoin's down. like the amount of Bitcoin's down because of tax regulations due to the infrastructure plan. That infrastructure plan has been well known for 6 months. For 6 months. Here at Tackle Trading, over the last couple of months, they've been debating it. At any point have I said at any point that infrastructure deal was threatened to not get passed?
No, we knew it was going to pass.
No, that was always going to get passed. It had bipartisan support. And so I find it a little bit funny. That's why it's comedy to me. I find it a little bit funny on a day where the infrastructure gets passed and Bitcoin sells off that they try to attach that to something that occurred on the breakdown during the European cash market hour open. So I would like to know how that coincides with it. It's simple. We always try to write causation to what happens in the market. We want to understand the why of something.
Yep.
When it comes to crypto trading, a 24-hour tradable instrument that behaves more like a currency market than it does resemble a commodity market, it's sold on technical events. It failed its breakout of 70,000. You can't deny that. And then when it tried to recover, it tried. You got to give it that. You got to give it a blue ribbon, Tim, because it tried. And that's what we do. If something tries, you give it a blue ribbon. It tried, but it ultimately failed. And it is as simple as that. It does not have massive overriding concern. It has technical concern. It failed the breakout. It did not fail the retracement, mind you. The retracement did in fact work. The retracement held support, went back up into the previous resistance, and ultimately tried to break out. The breakout failed last week. It came down and hovered. It tried. You had to give it a chance. It tried to hold that 20-period moving average, but it just didn't. The trade the breakout got failed at that point. That's today with the overnight action. And now you're in a moment in time where now you look at the trend and you say, okay, now we have slowing momentum and trend. We have the first violation of support in that growing trend that went from 40 to 69,000. I mean, think about that number, 40 to 69,000 in one trend. I mean, it was very impressive.
That's a pretty good run, right? Yeah,
I think you'll take it as the holders. I think the holders will take it. But as the traders go, the traders, nailed those that nailed the breakout happy. Those that nailed the retracement happy. Those that participated in the all-time breakout, not so happy. Trade's over. Now Bitcoin needs to settle down and reestablish more technical parameters. To me, this trend that drove from 40 to 70, that trend's over now. The trend's over now. We don't know where this is going to, where support is going to form. We just need to give it a little bit more time. And Tim, ultimately, on these types of shakeouts, and what I mean by that is this shakeout here and then the failure of support here, So the shakeout against the breakout and then the shakeout against the retracement, those things there, man, they're going to scare any bull trader right now. They're going to scare any bull trader. The trader is going to wait for something deeper, in my opinion. I'm waiting for something deeper. I think we got to let this volatility smooth out a little bit.
I agree with that 1000%. And I got to tell you,
And by the way, just for the Bitcoin holders, I'm not talking to the holders at all. Holders hold. They don't care about daily price fluctuations in any capacity.
If you're a holder and you got shook out on this, you're not a holder. So
it's true. That's very true.
Let's say it the way it is.
You're the trader.
That's right.
That's a little nervous about price, and that's fine too. But just it's okay to categorize it that way. Holders don't care. Traders obviously do.
I agree. All right, let's move into stock talk next. And by the way, if you're out there watching the show right now, always love having you guys come in here. I see a lot of hashtag Team Tackle in the chat. One thing that I enjoy doing every now and then is why don't you type in where you're watching the show from right now? I think it's really cool to understand, we've got a national audience, we've got a global audience, we got Team Tackle all over the world, guys. It's really cool to see where those cities and states and countries are coming from. So type in the chat where you're watching the show from right now and hashtag Team Tackle if you've not done it yet. Let's move into stock talk. I only got one stock story I want to cover today, and then also the earnings roundup. So let's start with those earnings reports there, Coach Matt, if you can. Kind of Walmart, Home Depot, a couple other really interesting names as well. Where do you want to start here today?
I want to start. Well, I'll give it to you. Do you want good that ended up bad, or do you just want good and good?
Do you have ugly?
I don't really.
Is there any
have
ugly?
An ugly today.
Give me the bad then. Give me the bad first. Then we'll go to the good. Okay, and then we'll go to the great.
Well, I don't know if there's a great.
Is there great?
I don't
just good and bad. All right. Give me the bad. Give me the good.
Let's get the ugly. Let's rip the Band-Aid off. Right, let's rip the Band-Aid off. And I say this, Walmart's raw numbers were perfectly fine. There is nothing wrong with what Walmart did on the quarter. When you're looking at the raw numbers, Walmart came in at 145 versus 139, a good beat on EPS numbers. Revenue came in at 140 versus 135, a good beat on revenue. That resulted in about a 4.3% revenue increase year over year. They also slightly increased EPS guidance. Now, so why the down? Well, actually, when the raw numbers came out, the market did what you think it should do, and it went up, 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 up. It started giving it away as we started getting into the conference call this morning. And when the conference call happened, there was a couple things that were said that have been blasted with other companies that also discuss these two issues. And the first one was the supply chains. They did talk about concerning supply chain impact. And they also talked about how inflation, which is a no-go in the market today, but they did talk about how the rising cost of inflation can certainly impact their gross margins in the future as well. And so that concerning commentary, I will say, from the CEO regarding Walmart's not Walmart's previous quarter, but situations in the future that could impact the company, that started selling off that commentary, and it simply has not found any key support level. Walmart's not something you're going to pick up and trade. It is something you're going to look at the low prices, maybe 135, good little double bottom of support. Not really sold on any support level around the 200-day moving average. This type of sell-off, you're probably looking towards the low points at any entry.
Yeah. And Walmart's not always a great trading company. So what about the long term here, Matt? Because we are coming into the 200 period moving average. The numbers were still good. I mean, you and I both had that commentary this morning when we were talking.
I just don't see a lot of evidence at the 200-day moving average. And so, you see, and a lot of times when something's prolonged neutrality, those moving averages just simply are not going to be as important as, say, when they are trending. And so there's just not a lot of data here at the 200-day moving average to support that as, hey, listen, you got to look at Walmart. It's around the 200-day moving average, right? Don't have that philosophy here on Walmart. I do it about 135. You see that technically about 135. And this is a topic we've talked about with Mark in the halftime report before, there's value fundamentally, but you also can see value from a technical perspective, and ultimately that's at 135. And so, numbers aside, numbers were fine. Price response and the concern for the future, yeah, maybe that sees a little bit of a deeper sell-off, but around the 200-day moving average, I just don't
Not
think
there yet.
traders
Gotcha.
are going to have interest there.
Very good. All right. So the bad we got out of the way. What about the good? Do we got good?
We do have some good. We do have some good. Let's look at a blow up. Let's look off a blow off top here in Home Depot.
That's so pretty.
Oh, Home Depot looks really, really good here. Home Depot reports 392 versus 341. Revenue came in at 36.8 versus 34.5. That resulted in a 9.8%. Honestly, raw numbers are very similar to Walmart. What's the difference? Both Home Depot and Walmart were doing identical things when the raw numbers came out. The difference is the commentary for the future. Walmart had some concern. Home Depot didn't. You see the build here in Home Depot. Now you're just looking for secondary patterns here.
Yeah, it's a beautiful breakout, obviously, and just a no sell day candle there. Beautiful. I think it's got to be on a watch list if you don't have it yet. I think momentum trading potentially in play here, but I'm not going to approach it that way. I'm looking for a secondary pattern to develop in the next week or two for me. All right. Very good. I know there was also some real, kind of big names in terms of the underbelly, those stocks that everybody's paying attention to. Lucid here today. What else did you catch in the earnings roundup there, Matty?
Let's definitely move over to Lucid here. Lucid Motors, nice $70 billion company. I always like to do that. When you're talking about, when you know their earnings numbers, they sold $0.2 million worth of revenue.
Mm-hmm.
Okay, say that again.
2.2.
No.
Okay.
0.2.
0.2. All right.
Yep.
All right.
Just a point.
All right.
0.2. Not exactly where you want to be from a growth company that is worth $70 billion, but we all know the Lucid story. It's about the future here on Lucid. And Lucid comes in at a negative 41 versus the expectation of negative 22. Their revenue came in at 0.2. They don't provide guidance for that. Again, this is a very, very new company, but not a lot to say about their earnings numbers, quite frankly. You got to like the breakout here. I'm looking secondary, though. I don't think I just think it's a little bit overextended here. I think it's secondary pattern analysis.
Yeah. I took profit yesterday, but that's the way I always do it as a trader. You got to follow your rules. I played that breakout a month ago. It ran up into the earnings. I don't hold trades through earnings. It's not a long-term investment, so I did knock it down. So I'm going to have to wait for a new pattern for a new entry if I want to play that one again. Nature of the beast there, Emily. All right. Any other earnings roundup there, Maddie?
One last one. We got Rocket Labs here, RKLB. This is a company in the aerospace and defense area of the market, industrial type stock. They come out today at a negative 24 versus the expectation of negative 12. Revenue came in at 5.3 versus 4.7. And then they had a slight increase in guidance. Here, technically, I think you got something that I think does interest a lot of traders, and that's that double top breakout right there at about 16, maybe slightly north of 16, give it around top shelf 1640. We've seen right shoulder breakouts work out very, very, very well in this market. Mm-hmm. And what we mean by the right shoulder breakout is off some type of reversal analysis. You got that right shoulder here. Keep an eye on Rocket Labs as it navigates a little bit of a breakout potential at 16 by 1640. There is just absolutely nothing until you get into the 20 range.
That is an interesting pattern. You're right. That's going to grab the attention of a lot of traders. That's inverted head and shoulders developing into a breakout post SPAC merger, post earnings on a new company. That's an aggressive stock with high implied volatility, no question about it. But I'm interested in that pattern on momentum, Matt. I'm glad you brought that one up.
Yeah, but that's all I had for earnings.
I only got one corporate news story then I do want to bring up, and that's Tesla. Tesla's in the news almost every single day. Obviously, one of the most talked about companies in a marketplace for good reason. One of the biggest companies in a market. Elon Musk had been selling his shares recently. Sure. You know who else got out of their Tesla position, Matt? It was Michael Burry of The Big Short fame. If you've never read this book, The Big Short, or seen the movie, The Big Short, Michael Burry is a market legend for the way that he approached the housing market crisis in 2008, made billions of dollars shorting bursting that bubble when it did crash. But the thing about it is, Matt, he was wrong on this Tesla position. He won't admit it. In fact, Emily, he did come out and say, I'm tired of being right, but just too early.
That is such a beautiful way to admit you're wrong. It
Funny
really,
to me.
it's a beautiful way to admit you're wrong. You know what? I am just so sick of being right, but being too early. It's some funny shade there. It's some funny shade. Tell me the last time a fundamental short worked in this market.
Or against Tesla. It's been a long time,
Yeah.
obviously. Yeah, it definitely, this one didn't work. He had to capitulate. It's the nature of the beast, and it kind of highlights exactly what's been happening with Tesla. I mean, Tesla breaking $1,000 again. How many times are we going to see this story? They might be heading for another split at some point. I don't know, but definitely interesting. I don't see anything in the pattern there to highlight, Matt. I know we've been covering this one a lot. I just wanted to give the Michael Burry news. Nothing there? Nothing there.
Oh, in the pattern, the only thing I'll say about the pattern, I said it last week, $1,000 is going to make a lot of sense from a support level, but you got to see it play out. We were early last week. You got to see that work itself out. And what happens, though, is you start to see confirmation a little bit differently the more data and the more time you get to develop that $1,000 support level, because there's really nothing there. There's a Fibonacci number there and there's a significant whole number there, but there's nothing historically there. And so giving it a little bit of time to work out that $1,000 support level, what happens is the confirmation levels also come down as well. And you start to see, okay, where could that pop be? Obviously, 1100 here stands out a little bit, but you also got a little bit of a moving average, 20-day moving average, as well as the 9 EMA right there. We got to at least reclaim those from a confirmation perspective. I think we still need a little bit of time here, quite frankly, but the more time, the more development it has, the better it starts to look.
I agree. All right, that's Stock Talk here. We're now going to move into our last segment today, which is the Queen's Court. And Emily, I'm just going to kick it right over to you. I know that Queen's Court is something we do each and every Tuesday. And Emily has a couple of stocks and a couple of sectors on her mind here today that she's interested in looking at for potential trades. Emily, what you got here for the Queen's Court today?
Well, since we haven't had the pleasure of chopping your head off the last couple of weeks, Matt and I have been kind of going a different route on Queen's Court, where he kind of, is my advisor. So you will be my advisor as well, too. But yet somehow I'm sure you'll not give me the proper advice and I'll have to chop your head off. But you guys know me. I like to keep my trading very simple and very easy. So part of my weekly routine is to obviously come into the markets and look at the S&P 500. So Matt, if you don't mind giving me a chart on the S&P, please. So again, it's a quick, top-down approach. Market is bullish. We're at almost at breaking out at the all-time highs over there at 4,700. So I'm going to then go look for something that kind of matches what the market is doing. So I'm going to go through my quick sector checkpoints, and I found XLI and XLK. So give me those two. So kind of similar look to what the market is doing. As a matter of fact, these two are kind of breaking out where the market is still trying to break out, right? Also give me a look at XLK. Similar situation. So now between these two, I went and found two companies that I want to trade, but I need you guys to help me figure out which one to trade and which strategy to use. Okay, now markets are breaking out. So the two that I have, so in XLI and industrials, we have UNP. So that's my pick in industrials is UNP. And similar to what the market is doing and what the sector is doing, we're high basing. If we break above that 245 zone right there, we're good to go. So I'm looking at UNP in industrials. In technology, your favorite, Tim, Microsoft. Now, Microsoft already broken out. We're already broken out there, that 340 range. So I'm looking at these two. And of course, my natural, where my mind is going to go naturally is going to go on the credit side of things and try to see if I can pick up some cash flow. So I quickly glanced at the bull put spreads for both, and we can pick up some credit there. And let's do we'll do the example on UNP, because I want you guys to kind of help me figure out which direction to go. So if we go back to UNP and if we were to build out a bull put spread on UNP, I'd be looking at the 30, the 31 day, and I'm looking at that 230, 225. as my starting point. I always like to be below a 25 delta. And if I look at that, I'm picking about 64 bucks. It's a $5 wide spread. So my buying power is going to be about 500 bucks. So keep that number in mind. Okay. So that's on the bull put side of things. I think I can get about maybe, if ROI wise, I think that's about maybe an 11 or 12% ROI if we build it out.
You know, and Matt's bringing up the theta spreadsheet. I'm glad you did that, man. That's exactly where my instinct went, because I'm doing the math in my head here, and I'm getting older, so it's not as quick as I was when I was a kid. 65-cent credit. It is true, actually. 65-cent credit against $435 cost. We're talking about probably that 15% or so.
15%,
but
yeah.
Matt, what is the delta on that? Is that a 20 delta?
It's a 20 delta right now. Yes.
Okay. Got it. What I'm trying to do the math on that roid on that. Okay. Anyway, so you're looking at
I'm filling out the spreadsheet.
Sounds great.
You guys talk.
Okay.
Go ahead.
So we'll keep that 500 number of buying power in mind, because then when I looked at this, I'm going, well, if my bias is bullish and I'm thinking that, market's going to break out, industrials are breaking out, do I really want to go cash flow? Or should I lean on the delta side of things? So then I looked at a bull call spread. And on the bull call spread, funny enough, I looked at buying the 240, which is the at the money. And then I'm going to try to get to like a net 25 delta. So if I was to buy the 245, I'm buy the 245 at the breakout. So the 245, so one strike out of the money, that's the 43 delta. But then I'm also going to then go and buy the 260.
I'm just getting ATR real quick.
You're good.
Okay.
So as Matt is running those numbers, so I'm looking at the 245, 260. Now it turns out that the cost of that as well is going to be about $500. So I've got a buying power of about the same amount if I go cash flow, if I go debit. So now it's just a matter of which of those which side do I go?
On the bull call?
On the bull call, we're going to buy the 245.
Okay.
And we're going to sell the 260. And we're going to do January. Sorry, Matt. We're in the wrong month.
Yeah, gotcha.
There you go. 245 and 260.
And 260. Okay. All right, so cost base is going to be about the same, 450 versus one around 500. Okay, so on the credit spread here, let's talk credit spread first and foremost. Here's your credit spread, right? You're doing the 230 by 225. You're bringing in $64 of credit. Your buying power is going to be 436. Your ATR buffer is perfectly fine. There's nothing wrong with this bull put spread, not at all. You got a 14% ROI against margin. You're talking 71 on the roid. Your ATR range is fine. UNP is not going to light up the world from a credit perspective. That's what you get when you deal with a company with 24% implied volatility. Exactly. And you're also looking at an implied volatility perspective on the individual stock that is very, very low. There is something occurring, though. There is something occurring that if I show you a little bit more time frame here.
Yeah, I want to see this too.
Let's go out a little bit more time frame here. Something occurring over here in a couple months, about 2 months from here. And typically speaking, before that blue icon, we'd like to see that volatility build, right? See that volatility build. Stock does absolutely nothing. What does volatility do? Volatility build. So I do anticipate in the time frame of your bull call spread a volatility build. Maybe not your bull put spread. It's not volatility is not going to hurt it. It's perfectly fine. There is not one thing wrong with that bull put spread. You are selling the 230 here, right? You don't have a lot of support. You're selling right above that support level. You're fine there as well. If you wanted the theta trade, you got the theta trade. My thing is, though, I got a market that wants to break out. I got a sector. Let's go to the sector here. I got a sector that is breaking out, following a prolonged neutrality environment, right? Right on the backs of a $1.2 trillion infrastructure deal that just got signed. You got some momentum here, and then you're looking at it at the individual stock, and you're saying, well, I got a stock that had amazing momentum, consolidated, had a great earnings report. Railroads have been in favor, and this is now breaking out. I like the directional trade here is my point. Volatility is low. Volatility could help you. And so if you're looking at a tiebreaker scenario, volatility being one could help you here on the bull call. I like the bull call here. I like taking directional risk.
I do like that analysis. I'm with you, Matt, on that. I'm actually a little bit surprised that you got that good of a credit on UNP. When I looked at the IV percentage, I was assuming our ROID would be a little bit lower. It's a good lesson there that you should always fill out your numbers.
It's not rock star. It's 71.
Yeah.
Like it's. I mean, it's
But
about
I
as
thought it'd be
average as
lower.
it gets.
Yeah. It's average. I thought it was
It's
low
about as
average on the
average as it
credit.
gets.
But that
It's-
implied volatility build is an important point as well, Emily. I think.
Yeah.
Yeah.
It's a sad day when I'm actually sitting here talking about theta versus delta, because this would have been a no-brainer for me 5 years ago. I'd be like, let's just pop those calls and go. But I have to be balanced, and I have to look at both sides, because I have really, really loved doing cash flow trades. And that's always where my mind will go naturally before I even consider doing anything bullish on the delta side. So it's good to have these conversations and look at everything on both sides of the angle and make a decision, especially when the cost is going to be the same.
Mm-hmm. Yep.
So
Costs are similar. And again, there's nothing wrong with the bull put spread, but my advice to the queen would be, given the fact that you're seeing a little bit of top down here, market, sector, stock, all doing breakouts. I think the directional risk makes sense here.
It makes sense to me. What about Microsoft, Matty?
Microsoft, on the other hand, I'm just going to say direction. We can get complicated.
we don't even have
here
to look at Microsoft numbers.
because
We're good. We know it's
the bull put's not going to be there. Like it could, but theoretically,
I don't even want to.
Right, with Microsoft, you're dealing with the same type of volatility. You could do it. You could sell the 310, bring in a little bit of cash flow here. It would be very, very similar to the credit spread you're getting on UNP. It would be very similar to that. But once again, you're talking about one of the best companies in the world, not just in the US market. Breakouts have been strong on Microsoft. I think if you want to cap your gains here, be my guest. I like the breakout.
I do as well. In fact, and Emily, I'm glad that you brought these two different companies up within the top-down analysis of those sectors. Those ones are grabbing my attention. I love the analysis here, and they're two of the leaders. By the way, Microsoft was on our reports over the weekend as well. You guys should have been prepared for that if your team tackle on some of these breakouts. A couple of interesting ideas. I think you go delta, and I love that you're starting with theta first. You're always thinking theta first. You're thinking cash flow, but the two analysis here, I think it does lean towards delta. Whether you do long call or a bull call, it's going to come down to cost. How much do you want to spend relative to that? Microsoft's got great liquid options, one of the biggest, best companies in the world. Should be on everybody's watch list. There's not a debate in my mind about that. I'm open to either one here, Matt. I think you could even start with a long call, roll it into a bull call. There's some creative stuff you can do on the delta side, depending on your rules and depending on your skill sets, in my opinion.
Mm-hmm.
Yeah, there certainly are, and I do like a bull call here, starting with the call option out of the money. But again, straight call stock, any directional trade on Microsoft with this type of breakout. And again, we haven't even confirmed, guys. Like, that has yet to confirm. But again, close above 340. I think you got to call it confirmation.
So, do I still get my head chopped off?
Of course.
I'm still trying to figure out that part. Do I still get my head chopped off?
Because you asked. Yeah, because
All
you
right.
asked, you are going to get your head chopped off because you want to.
There you go. It'll give me a good laugh, no doubt about it. I love those two, and I love the Queen's Court each and every week. By the way, you do hold your trading lab now on Tuesdays. You're going to be having that tonight, and you're also going to be on the coaches show tonight. Busy day for Coach Emily here at Tackle Trading.
Triple header today. I got halftime report. I've got the Dynasty Lab at 7:00 and 8:30. Coach Greg and I will be hosting the coaches show. So come check us out later on this evening.
Fantastic. All right. Very, very good. Guys, let's start moving into the end of our show now. And, been a fun, lively one as always. Love coming in here and breaking down markets one step at a time. Let's go back on the S&P and get final thoughts. There's also an event I want to promote for next Monday night as well here. But let's get Coach Matt's final thoughts on the market itself and then talk about this Swing Trading 101 event, Matt. And I'll drop a link in the chat for everybody out there.
Yeah, I'm going to be doing another webinar on swing trading. It's going to be labeled, it is one of those Tackle Trading 101 events where I'm going to be talking about the basics of swing trading. And as the pro members know, I'll always try to find a creative way or two to describe support or resistance or, individual plays. But we're going to be doing a basic trading webinar on Swing Trading 101. So if you are new to the market, new to tackle trading, and new to trading in general, this would be a great event to come learn the basics of swing trading analysis and the basics of the step system, which is our swing trading system at Tackle Trading. And so if you guys, you can go and set the reminder here. Tim will post a link in the YouTube channel. You can just go set that reminder so you can get I think it gives you a nice little reminder, either email or something before the event, but it will be next Monday, 8:30 p.m. Eastern Standard Time. Coach Matt on swing trading basics for the Tackle Trading 101 series.
Well, and those of you out there who are Team Tackle, one thing that we do each and every year is we put some of our products and our systems and whatnot on sale around this time of year. And we got Black Friday coming up at this event. I believe at the end of the event where we'll be promoting some of those promotions that we do. So if you're Team Tackle, you're looking forward to that. Make sure that you're prepared and ready for that. Come and join us live. Let's have a great show. I love it when you teach swing trading, Matt. I was talking about this on the podcast yesterday. I think technical analysis might be your most pure love in the markets. I know that you love the Fed, you love the macro analysis.
Love the Fed?
Well, talking
Wait a second, hold on. Let's erase that one from the
he also loves earnings too, Tim.
I need to find me some type of programmer to get that one outside of the lexicon. Oh wow, let's start that over.
Big picture, macro analysis, fundamental analysis, value analysis. Like you do the research on the Tackle 25. I know how much work you put in that. You love markets, but I think technicals, if I was making a ranking list, I might put that at the top. And there's something about the purity of it, Matt, that you are so really, really just excellent at. So I'm looking forward to the show. I'm looking forward to the webinar.
I will say this, out of all the ways you can analyze, right? Fundamentally, technically, behavioral analysis, economic analysis, obviously central bank and monetary and fiscal analysis, a lot of ways you can analyze, right? The purest form of analysis, in my opinion, is technical analysis.
Yeah.
It's all about the picture.
The picture, charts, and find the good ones.
Done.
Find the good ones like Microsoft and UNP. Yeah, you don't have to trade the tough ones. Monday night, we'll be talking about it all week long, guys. We'll also be sending some information out about the promotion. Make sure that you set that reminder and come and join us live Monday, 8:30 p.m. Eastern. Emily, any final thoughts from you there? And obviously tonight, you're going to have plenty of opportunities to talk to Team Tackle there, but any final thoughts from you?
Final thoughts. I thought I had finished my analysis, but now I got to go look at front running XME. So
XME.
thanks, Tim.
Yeah. Hey, you're welcome. You're welcome. It's a chart I like. I'm interested in. It's got a potential for a breakout or a little bit of a front run there. And there's a couple of different ways you can play it. Guys, that's our show here for a Tuesday. If you've not done it yet, give me that thumbs up and subscribe, click the bell. If you're new to the channel, it's great to see you. Adam Stewart, my man, always great to see your name here. Glad that you can make it here live. I know you watch the show a lot, but great to see our Team Tackle members out there. Guys, we'll be back tomorrow with Coach Tyler. Have a wonderful rest of your Tuesday. Don't miss Dynasty Investors Trading Lab tonight. And the Coaches Show every Tuesday is also tonight.